The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and go ahead and get started. This is where traders come to maximize leverage, minimize risk, and be one step ahead of the markets. And as we do each and every day, make sure you call on in, and you can reach us right here. Any of our shows are taking calls, and you can call me right now with any questions you got about stocks, options, futures, forex, and, of course, Nadex, spreads, and binaries. You can reach us at 877-927-6648. Again, that's 877-927-6648. And looking over right now, seeing what's going on in the markets. The S&P sort of been up, down, up, sort of flat right here, right currently. But right now we're up 6 points on the S&P. We got NASDAQ up 17. The Dow is up 41 points, and the Russell is up 7. Gold's up $9 on the day right now. And we got copper up 1 3/4%. And silver is up about almost 1 3/4, 1.67% right now. We got corn down just a mere 5 points, and soybeans is basically flat on the day. Oil has decided to go ahead and make a turn around. It's moved up $1.50 after the big declines it's had recently. And natural gas is still just dropping like a rock, down another 3% today after having basically 4% losses the last 2 days. I mean, it just keeps getting wiped out. And it was at 3.801 yesterday. Now it's at 3.667. Looking on over at euro dollar. Euro dollar is up 15 pips. Pound dollar is up 21. Aussie dollar down 48. So Aussie getting hit pretty hard. You got the U.S. yen, which comparatively to the others. And we got the Aussie dollar basically flat on the day, or the U.S. yen, but flat on the day, up a pip. We got the U.S. franc down 8 pips. The U.S. Canadian is up 5 on the day right now. And as we do each and every day, we hop over and we like to look at the fundamental announcements, what came out last night, what came out this morning, and what is coming up. Well, last night we had the private capital expenditures come out of the Aussie dollar. It came in better than expected. Despite that, the Aussie dollar decided it was going to go ahead and tank. And so let's check that out real quick. So we go into the USD and checking this out right here. We'll move on into when the report came out. It came out at 7:30 last night. And we can see right here when that report came out, private capital expenditures, you would think that'd be a good announcement, 2.8%, with the expectation of 2.1%. And that's the change, but the issue is it's the change in total inflation, the adjusted value of new capital made by private businesses. And if it's greater than the forecast, it's supposed to be good for the currency. But despite that fact, it went ahead and it moved on down. And there's a lot of, obviously, there's a lot of factors going on right now. Things just don't seem to be reacting to the news like they should. And the Aussie dollar did move pretty sharply ever since that announcement. You can tell, let's see, like I said, we had that announcement last night, and around 7:30 right here, and you see the big spike. Aussie dollar went down, pulled up a little bit, and then just fell all day, and down pretty strong right now from yesterday's close. And some other reports, let's go ahead and check those out, what else we had going on. And, one of the things I like to do is I like to straddle news announcements. So the nice thing is, because even when it's good, it ended up being bad, and the thing moved down and still could have made money on it. And let's see here. Let's go look at Aussie dollar. Doesn't make sense. Even when it's good, it was bad, right? And we'll even check out the announcements that came out this morning. It's sort of weird even how they reacted on the S&P. This fiscal close has everything in a loop right now. We had the Bank of England governor come out, and he decided to have a little chat. And Governor King, so I always find that funny that his name's King. And Bank of England, you think, the king, but his last name just happens to be King. I don't know. So I know it's totally pointless, but anyways, I find it humorous. He held a press conference on the Financial Stability Report out in London. That came out at 5:30, along with, of course, the Stability Report itself. And if we go in and we look at that report, we can see right here at 5:30, didn't have a massive impact, but overall it did give some strength to the pound. It started moving on up after that report came out. And then looking on over, at 8:30 is when things really started moving and shaking. And as you can see, that even the dollar got weaker as the market got a little bit stronger right there. But not just a massive amount of strength. Let's check out the S&P. And the report again came out at 8:30 this morning. What do we have? We had the preliminary GDP, and it came in at worse than expected. And the market sort of went down a little bit. And along with the unemployment claims, came in worse than expected. They came in higher at 393 versus 392. And market went down a little. But, I mean, when I say a little, I really do mean a little. So, I mean, you just saw like this little move down like a point. And it's like, really? We just had a bad GDP, worse than expected. We just had a bad unemployment claims, worse than expected. The market moves a point down. Decided to rally up, and then it gave it all up. And I bought into this right here. I sold out, and I was pretty happy I did. And then got short signal. Market moved on back down, pulled back up from that after basically filling in the gap from yesterday. So, right there. So, just touched the gap. It was a gap-filled trade. I didn't actually play the gap-filled trade this morning. I didn't expect the gap to fill. It did fill. It went down and, just touched it, pulled on back up, and then has been flat for quite a while now. Not a big surprise going into the lunch hour. And now we'll be looking to see, what tops of the fiscal cliff come out. And, of course, that'll impact the other half of the day if they make, I'm sure they will, make some sort of news announcement. Somebody's going to come out and say something and going to jack up the market in some way or another. And, we already had a little bit of that today. But all in all, just sort of, watching to see, Boehner came out and he said, well, there's no big progress for the 2 weeks that we've had, where we've been talking. And he said that about, an hour and 20 minutes ago or so. And so that would have came out about noon. And you can see right when he came out and he made his little announcement, I guess a little bit before noon, the market just dropped down. So, Tuesday, Reed has to come out and say something negative. Boom, market drops out of nowhere. Wednesday, Obama decides to show up eventually and give a little speech. Market decides to fly up. And then Thursday, Boehner comes out and says, no progress. Market drops. So it's like, well, these guys just shut up and get it over with so we can start trading again. But, you can, of course, trade it anyway. And, fortunately was able to pull some profits out of the market regardless. But, it'd just be nice when it's not based on the random fiscal cliff news, but the charts and scheduled news announcements and, actual fundamentals. But I guess we'll, hopefully we'll see that eventually one day. So, but I thought there might be a good chance they'd come up with something in the next couple of days. But it's Congress, right? We elected a stalemate Congress. And, not me. Well, we, as the United States of America people, for some reason decided it was a good idea to re-elect the exact same Congress that couldn't get along. But, of course, they're not all in office yet, but I'm sure they'll all get along once the new people get in office, right? And looks like we do have a lot of sentiment going towards an up move, a bullish move, a down move on the euro dollar, pound dollar. And so looking at sentiment right now across the markets and basically meaning stronger dollar, and people are, betting on just continued anxiety from the fiscal cliff. So don't get too comfortable right now just because we're seeing this whole thing. It could still easily take a shellacking and get knocked on down. So we got those reports that came out this morning, and then we got the pending home sales. That came out at 10 a.m. That came in like way better than expected. It came in at 5.2%, which is, absolutely fantastic. We haven't seen that high of a number since really around June of this year. And, we were negative 0.3, we were negative 2.6, positive 2.4, negative 1.4 at the last 5 months. So a great number that comes out at 10 a.m. And we get nothing. This is what this little rally is, right? So new home sales comes in positive, pushes the market on back up, and then Boehner decides to talk and poof, falls out. So you can really track it. Good news, bad news comes in. I don't know what this whole little rally is about. It's about knocking out the stops or whatever. There's no reason for that to happen. But just maybe positive fiscal cliff hopes. And but then, they gave them up, and then new home sales, Boehner, and you just follow the news and the news announcements right there. And, it's pretty easy to explain the markets at the moment. So that was our pending home sales that came out this morning, even though being better than expected. Supposed to be the big, forerunner in an economic recovery. But I guess no forerunner matters if they don't get their act together. Then on over to natural gas. We had natural gas, like I said, just taking an absolute pounding. And came in, and the inventories came in at, and I talked about this about a month ago. I said that we ought to be seeing higher and higher inventory reports come in because the productions went so high. And it's not like the demand has went way up. And so we ought to see higher inventory reports, which will lead to lower prices. And just a basic fundamental analysis. And you can see this thing just bam, bam, bam. Getting knocked down 4% up, 3% down, 4% down. It's just been, you're looking for something volatile to trade right now. Hello, natural gas. Okay? And so if you like trading something that's volatile, then this is your trade. Okay, this whew, you don't get moves like that. All right, 3% moves on a consistent basis. And so you definitely want to be hopping on there, checking that out, trading that. Now, if you are trading natural gas, you want to trade it with limited, defined risk. Do not hop on there and, in my opinion, do not be trying to go on and trade natural gas with the futures. A lot of people go, well, I don't. I trade, short ETFs, or I trade long ETFs or whatever. Well, that's okay, but you're getting horrible buying power, okay? I mean, you're just getting killed on your buying power. Your money's not working hard for you. And so if you want to go in and you really want to trade, whether it be on an intraday, a daily, or even a weekly basis, you can do that over on Nadex. You can actually trade on the Nadex platform on a daily, intraday, or weekly basis and take advantage of these massive moves taking place in natural gas right now. And if you don't have a Nadex account, hop on over right now. Check it out. If nothing else, just demo trade it, okay? Just hop on, okay? It's always good to learn new things as a trader. If you stop growing, you stop making money, all right? So keep growing as a trader. Hop on over to Nadex.com. Demo trade our products. Demo account. Fill in the username, first name, last name, phone number, and email address, and you'll get immediate access to a demo account. They'll send you a password, and you can log on right away. Okay? Just check your email right after you fill that in. In about 15 seconds, you'll have access to get a live account. Click Create Account, and from start to funded in about 5 minutes. And let's go ahead and let me pull that up. And what I'll do is I will check it out. And let me log into my account over here. I'll get to an account, and I'll show you how you could have played natural gas. Okay? And there's pretty cool different ways to trade it. But let me see here. All right, there we go. So we go in here, and we can, do whatever we want to do. I have, these different random trades we have on here from this morning that we're playing with. But we go in, and let's check out commodity bull spreads. You go to natural gas. You can also do commodity binaries, natural gas. And then you want to have, a target price, right, for whatever you're trading. So let's go in. Let's pull up that natural gas chart and look at it over here. So let's say we're looking at the daily binaries on natural gas. And then let's go down here, and let's check out what was happening this morning. So you go in on the morning, and you use the diagnostic deviation levels. We post those every day inside the diagnostic area. If you don't have access to that, check it out. You can get a 2-week free trial. Go to TFNN.com, click on the diagnostic box spread analyzer. As soon as you do that, click right there. Again, 2-week free trial. And to help you with your purchase, go ahead and grab some Tiger Dollars. And every purchase will give a donation to the Salvation Army in your name there. And you can go in here, and you can basically get a massive discount. So you can save a 25% bonus match on any amount that you buy here. So a great way to save money, plus get a 2-week trial. So sign up, get your Tiger Dollars, and then hop on over as soon as you do that, and then sign up for the diagnostic box for analyzing your 2-week trial. You'll get access to the deviation levels. When we get back, I'll show you how to use the deviation levels with the binaries to pick your trade. Stay there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome, folks. Back here to the Diagnostic Trading Hour. I am your host, Darrell Martin. And right now we're checking out just natural gas has been moving and is shaking in different ways to trade it. So let's look at it. This morning we came in and natural gas, we'll pull up a chart on that, was sitting right around 3.75 or so. Okay? So let's hop on over here. Let's check out the deviation levels on natural gas. Sitting at 3.75. So let's check out a move down to potentially, say, 3.717 or even lower from there. So we're going to go on, and we can see it did move down, obviously, well lower than that. But let's go ahead and check it out. So we go over here, and we set a move down to 3.717 or lower. So now what we can do is look at, the prices on these. So 717, 720, what was this priced at this morning? Well, we can open it up. We can look at the chart. And we'll see that you could have sold this morning, for right around, 50, 60 bucks, maybe 70 bucks this morning, and you could be buying it back right now for $8.50. Okay, that's at a one deviation move. So that would have given you a $30 risk. When you're selling it, the quote is the risk, okay? I'm sorry, is the profit potential. When you're buying it, the quote is the risk. So I'm going to say that one more time for you. When you're looking at a binary on the quote, if you're buying, the quote that you're seeing is your risk. Your profit potential is $100 minus your risk. If you're selling, the quote is your profit potential. So if I'm quoted at 70, I can make $70. I could lose 30 because it's always a $100 value. So if I can lose 30, I can make 70. Okay, so that's why when it's at 70, that's my profit potential. If I was buying, I'd have a $70 risk with a $30 profit potential. Okay, so I could have sold that one. And, natural gas has been moving like crazy. So what if you went even lower? What if you went to like 3.632? That's a 2 deviation move. So let's check that out and see what that would have looked like at 3.632. That's a big move. And so we go to 3.640. Okay. Check this out. See what we got. And so 3.640. You could have got in this morning right around, $8 to $10 risk. So sold it for $90 profit potential. I think fell way down to $60. And so, you could have made some nice money on that. That would have been basically $60 right there. Would have been a $40 profit on a $10 risk, a 400% return in a very short period of time. And you could have went in and you could have done a $10 trade here. You could have went to the upside of the $10 trade on the buy side. The thing moved up or down either way and hit one of those levels. You could have got out. It's called a straddle. And so what do I mean by that? Well, I could have went in and I could have sold this for a $10 risk, and I could have went up higher using the deviation levels. And let's say I was going out, 2 deviations, or even just 1, but let's just say 2. So I could have went over to natural gas and got the, let's see here, make sure I'm on the right one. Yeah, 3.970 is the trade I could have went. I could have bought that one for about $10. I could have went over here. I could have sold this one for about $10. And then I could get out of it when either one of them are hit at $50. So I have a $20 risk, and I have a $30 profit potential if it hits that and I get out right away. If I hold it to expiration, I can make more, but you don't want to hold to expiration because you could have a trade that goes from a winner to a loser, just like we saw on some of the charts we're looking at over here. Let's pull one of those charts back up. Like I was looking at this one right here. And, let's see. You got that chart where it went way down and it's pulled back up. And, now you got a trade that was making a lot of money and it's giving a lot of that profit potential back. So you don't want to hold till expiration. You do want to get out of the trade. And you want to have a target. I was talking to somebody this morning, a trader this morning. They're talking about a binary that they got. And they're like, yeah, it's like, what binary did you sell? And they were telling me they're on the Dow. And they told me, hope he didn't mind me using this example, but, he said, I sold the $2 one. And I'm like, well, why'd you do that? He's like, well, because it's low risk. And one thing I talked about is, you can't trade based on money. As funny as that sounds, money is the end product. It is not the beginning. It's like saying, well, I play football. Well, what's your strategy? Win. Well, that's great, but how are you going to win the game? Well, I'm going to win. Okay? I'm going to get touchdowns. I'm not going to drop any passes. Nothing's going to happen negative. I'm just going to win. And you can't do it that way. You have to go one play at a time. You have to play well. And if you play well throughout the game, at the end, you may be the winner. Okay? But you want to know at the end that you played well, so that way you did everything you could, not simply that you traded to make money. And same thing goes with trading. You got to trade well. You can't just trade to win. You can't just pick a trade based on, well, this one's low risk. You need to have a reason for the trade you take. And it cannot be it's low risk. It has to be it's a good trade. So when you have natural gas moving, 1, 2, 3 deviations a day, then, well, that's a good reason to go in for a 1 or 2 deviation move. And you can use Binaries to take advantage of that and have really low risk versus going out and getting killed because you went the wrong direction on natural gas and all of a sudden it kills you. So, because it can move up 4% in a day too, right? So, I know we had a caller yesterday that took advantage. He was actually in a short natural gas fund. He was short. I told him to take some profit off and hold on, and I hope he did because got some more money today if he did. Y'all have a great time right there. Hold it right there. We're going to be right back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin. And we're just looking at, natural gas trades. The way natural gas has been moving lately, there's some great trading opportunities, but scary trading opportunities. So you do want to go in and make sure that you are trading with defined risk. And so we're talking about how to trade it on Nadex binaries. Another way is to trade it over on the Nadex spreads. And so you go up here, you can go up to commodities and go to bull spreads. Click on daily. You're going to want to find one with as low risk as possible. So let's say you're going short. Wouldn't be too hard to figure that out after the last couple days and just the trend going down, right? So we got it right around 3.75 this morning. We go in. We're looking for the lowest risk trade that we can find. And let's see, we got 3.8 on that one, 3.8 on that one. Well, if you got the same ceiling, okay, or same floor there, same ceiling in this case, 3.80 on both of them, you're going to want to get the wider spread because there's more profit potential. So you always want the wider spread if you have the exact same ceiling and same expiration time. So that expires at 2:30. This one also expires at 2:30. So looking at that, we'll go in, we'll check it out. What would have happened if we would have sold it this morning? Okay, let's go in here. We're going to open up the chart. We're going to look at this. And if you'd have sold it this morning, and we'll go ahead and then pull that chart right on back up there so we can look at it. I'm going back and forth a lot. But it's always good to, keep up to it right there. So let's just say this morning at basically 9 o'clock. Okay, so right when the pit opens there, 9 a.m. So right here, 9 a.m. Eastern Time. could have got in for about 3.735. All right. And so if we go over, what would that have meant? Okay, so let's put it on here and put 1 in, and then just update your price. 3.735. All right, so you're talking a $65 risk on natural gas. That's awesome, okay? So you can go in there, you can trade that spread on natural gas, 3.735. You have a $435 profit potential, and it moved down quite a bit. Let's say you close the trade out right now, all right? So if you did go short this morning when it was up at 3.735, and basically right as the market opened, as it was starting to trend down, then I sold at 3.735. Say I bought back right now at 3.671. Then let me do that one more time. 3.735 minus 3.671. And that's basically, it's not a huge profit, but it is a profit nevertheless. So you'd be up right now. So it's like 0.064 on the trade at the moment, which would be 64 ticks. So you risk $65, you're up $65 right now on the trade, 1-to-1 risk-reward ratio, and just like trading the Nadex, just hopping over and just like trading the actual natural gas itself. So you go in here and look at this, and one of the things I like to do is I like to draw boxes on the screen. So we had a 3,800 to 3,800, right? So we go over here, we shrink this puppy way down, okay, because it's a big old box, and which is great. So we go to 3,800 right here. Bring it on down to 3,300. And it's going to go here just a little bit longer, so 3,300. Okay? So you can make money all the way down here. You sold here. No matter how far up natural gas goes, you cannot get stopped out of the trade. The most risk you're ever going to have on this trade is $60. But you can make money all the way down, and I mean quite a bit of potential. You have $435 of profit potential, so you're not worried about your profit potential on the trade. You could have done 1, you could have done 5, you could have done 10, all right? But on one contract, you're talking $60 risk. You can't be stopped out, and right now it's up basically a 1-to-1 risk-reward ratio on the trade. And why do I put a box? Well, up here at the top, we have our, you can go in, and so right here, whoa, let's back out again. Put that back on there. And we'll zoom back out. Okay. So right here on our box, if they'll let me do a text note now, we have our ceiling, okay, of 3.800. All right. And then if we go down here, we have our floor. I want to say that's 3.3. Is that right? 3.3. Yep. So we'll go here, and we got our floor of 3.30. Okay. And then we got in on the trade. We're talking about the entry price. So if we got in like right there at 9 a.m. when the market opened up. Okay, so we got in at 3.7, 35. So we'll go in. Okay, so entry 3.735. If it'll let me grab that. Activate it. There we go. Activate the drawing. We move it up. So that's our left side of the box. And then it expires, okay, at 2:30 p.m. So we'll go over here. We'll add one more text note for 2:30, so 14:30 right there at 2:30 p.m. Eastern Time. That's our right side of the box. Okay? And I can even activate that and move it over if I need to a little bit, but yeah, we'll just leave it like it is. And then you can go in, and if you want to, you can always edit your chart. So I go to the settings, and I can move it over further to the right side. So I can go to price, axis, expansion area. I think that'll do it for me. So yeah, we'll make that like 50, okay? And by doing that, it'll give me a little more room on the side there. So now I can see there's my box. So I have my entry price, my expiration, or it could be my exit, okay? I got my ceiling, and I got my floor. Therefore, I have a box. And on this box, I can't lose money if it goes above the ceiling. Okay, I can't lose any additional, I can't lose money. I can't lose any additional money beyond my original risk. Okay? So if it goes up here, $60, capped, doesn't matter. and I'm not stopped out. This is the number one thing, is you're not stopped out of your trade. Okay, you have till 2:30 over here to be right. So if it goes up, and let's say natural gas does go up to 4, okay, you're still only down $60. If you're a natural gas trader, you're getting hurt pretty bad at this point. But in this case, it goes down, and so you're actually making some good profits on the trade. But if it did go up, you'd be down your $60. You're still in your trade. You don't have a stop loss because the trade is your stop. The box is your stop. All right, so you have a stop loss without having a stop trade. Okay, so you're still in your trade. Market's moving. Let's say it's going against you, and then it comes on back down. Then you actually could still profit. Maybe you went the wrong direction. Maybe you bought the box up here. You bought the 3,800 up to, let's see, was that 500 points wide? So up to 4,300. You know what? You lost $60 in the trade. Okay? Maybe you straddled. Maybe you bought and sold the box. All right? And let's say you had a $60 risk on both sides. Well, you're up $60 on this one. You're down $60 on, to say, the upper box. And you're basically at break even right now. Okay? Because it didn't move, that far in comparison to what box that you got. So there's different ways to trade it. There's a lot of cool ways to trade them. You can do straddles. You can do strangles. You can go in and you can do tiered spreads. You can hedge. You could actually sell natural gas and buy spreads to hedge it. You could buy natural gas and sell spreads to hedge. There's a lot of different ways to do it. I show you a lot of the ways inside the Diagnostic members area, so definitely check that out. And you can log in and you can actually see exactly how it works. I give you tutorials, step-by-step tutorials on how to do it. And there's a help desk area you can ask all the questions that you want. And I'm there to help you out. But that's just one of the many ways. But natural gas is a big mover and shaker right now. So when you start seeing things like that, it's going crazy. That's the stuff you're like, well, how can I trade this tomorrow? Okay? And, natural gas hasn't just had big moves one day. It's been having big moves day after day after day. And so if we go and let's check out a couple more things, see what else I can find for you. Okay, here's an interesting one for you. You might want to check this out. All right, so if you are a stock trader, listen up. Okay, listen. You're going to like this. There is an interesting trade opportunity that exists right now. Okay? This has nothing to do with Nadex, by the way. So it's on a trade called GUT. And you can go over here to the GabrielliUtilityTrust.com. Okay, GUT's currently trading at $6.98. Okay, so what? Who cares? What's this GUT thing? Whatever. All right, that's not the interesting trade. Okay, the interesting trade is combining it. This could be known as an arbitrage trade, and I'm not recommending this trade to you because you have to know how to execute it right. And you have to go into all the details, but it's something that you want to check into. Maybe we'll go into it more tomorrow on our show. But you can get in there and, let's pull up, see a trader log. There we go. All right, GUT R, Gabriel Utility Trust rights. Okay? Well, you can buy GUT R right now for 8.5 cents. It gives you the right to buy GUT at 60. Or at $6. Okay? Well, what's GUT trading at right now? Basically $6.98. So for 9 cents, I can get the right to buy GUT to convert the shares at $6. And it's not an option, so it's it's similar to an option, but it's not a regular option. And let's say you're trading at Thinkorswim or whatever, you'll have to actually call in. And so this is a pretty cool trade if you're picking up what I'm putting down. All right, you can go in here and let me see here. You will have to call the, let's say you're trading at Thinkorswim. You'd actually have to go in, and you can check out the Gabelli website to look into the details on how it works. You probably also, if you buy this, what happens is you'd buy it, you'd sell GUT, okay, you go short GUT, and then you'd have to exercise the Gabriel Trust rights, okay? And the way you do it, you need to call the corporate actions team, like I say at Thinkorswim, okay? But this is a very, very unique trade. It doesn't pop up that often. And so I'll get some more details for you. We'll go over it in even more detail. But I think you have till December 12th or something like that to actually do the trade. But just check it out. Just look at it. I want to be careful because this is a very advanced type of trade. Don't want to mess anybody up. But it's pretty cool. If you can buy something at $6, for 9 cents, and you could sell it at where it's at right now, $6.98. So you'd buy the GUT R, okay, and then you would sell GUT. And then you'd call up to exercise the right. So you'd own it at $6, and then also be shorted at 698. That would be what's called arbitrage because you're buying lower than you're selling. And so sort of a very cool trade. You ought to, if nothing else, it's a good educational opportunity for you. But definitely look into it. Email me if you have questions about it. But I just want to bring that one up. One of my friends who works over at a big firm just sort of let me know about it. I thought I would be nice and share it with you on the show today. But if you get the idea of being able to buy something lower and sell it higher, that's and know it's going to happen. So that's sort of the cool thing there. As always, we never make recommendations here. It's educational, but you read between the lines. It's a pretty cool opportunity. Okay, so now let's go ahead and hop over. Let's see where the deviations are, where the markets are right now, and I'll show that to you. We'll pull up. We got Gadar. You can't look at a chart at Gadar, but we'll go in and we'll check out the S&P, what's been happening on the markets, and according to the deviation levels. And let's see, according to the deviation levels, let's go here. There we go. All right. So on our deviation levels, we expected the market to move up to 13.4. They definitely did that overnight. They were like right into it. Then, so you would have been, if you're long, you'd be tightening your stop right away. They moved on up into 14.16, so we'll be looking to tighten the stop again. So basically just keep it where it is. There's nowhere to tighten it to. But what you could do is at that point, you could then move up your stop at any subsequent bar that you wanted to. It got really close to a one deviation move at 14.19.8. It's only basically a point off of that. When I'm getting within a point or so of a deviation level, I'm tightening my stop again, so you tighten it out. And this is pretty much where I got out of the trade this morning. Actually, I got out right over here. So I had it over here, and then I tightened it. I'm like, okay, well, we're going down, we're coming back up. So I got out on the trade. And so that could have been very, very useful for you. And then it dropped on down a little bit, almost, like basically I said, filling in the gap right there. Settlement price yesterday at 14.07. It got down directly to 14.07 and filled in the gap. So it actually was a perfect gap fill trade on the S&P. And then if we hop on over and we check out NASDAQ, NASDAQ went on over, and let's see, it did not quite fill in this gap at a low of 2666.25, and the NASDAQ 2661 was the gap. Okay, so it did not do a full gap on that. But anyways, on the upside move, 2687 was a one deviation move. When it hit that, you definitely tighten your stops. It hit 2688.5, so it was perfect. Hop on over and check out the Dow. On the Dow, we had a one deviation move up to 13.066. Didn't quite hit that, but it did have the 0.7 deviation, which is 13.033. So once it did go ahead and hit that, then you're looking to tighten your stops. Don't expect a whole lot more movement, except for up to potentially 13.066. And so it got up here, you tighten your stop, and then boom, falls back down. So perfect trade for you to get now. So when it breaks those levels, after it goes up there and it breaks them, starts falling back down, that's when you're looking for a reversal trade. And then hopping on over on the Russell. So on the Russell right here, got to move up to 824.2 on the high for the day. And we had an expectation of a one deviation up to 822.3. So again, perfect move right there. Just busted the deviation level, turned on around, gave you a great reversal trade, but did not fill in the gap. And then we'll hop on over, look at, as we know, natural gas, moving like crazy. Moved on down to 3.637. We had an expectation for it to move on down to 3.717. Well, it busted that level right here. You can see it came down. It hesitated right at it, which is what should happen at a deviation. And then it moved on down to the second deviation, 3.674. And then on down to almost 3.632, which would have been a two deviation move. So great stop and the great trailing stop that you could use all the way down. Hey there, folks. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We're scrolling through the markets and checking out where everything is currently trading. So we got oil moving on up after getting beaten down recently. Had that big drop yesterday. Had a big up move today up to 88.69. And what was our expectation on that? Well, we thought it would go up to 87.26. It did. We thought it'd go on up to 87.57. It did. And then we thought it would stop somewhere around 88.03. Well, it basically did. It went up a little bit further on up to 88.80. Was our next target to hit 88.69. That would have been a 1.5 deviation move. Anyways, at 88.03, we're looking to basically just keep tightening stops all the way. And that depends upon what bar type you like to use. My personal favorite is I like to use, if I'm using minute bars, I like to use 10-minute bars. So as soon as I broke that 88, okay, this is how I'd be trading it. As soon as I broke the 88.03, which would be right here. I mean, it did it like right on the open, all right, for oil. And I'd be tightening up on every single bar. At the close of every bar, I put it at the stop below because I don't expect it to go further, okay? So if it does, it's just free money. So I'm tightening it up, and then bam. So knocked out right here, right below the low of this bar, 88.47. Had a great trade. Could have, made quite a bit of money on that trade, and you'd have been glad you got out once it broke. So once it's a deviation level, we're tightening it on up, hopping on over, and checking out gold. On gold, we got right here, well, not a whole lot, right? So checking out gold for the day right now. Gold moved on down to a low of 1722.8. And we expected gold to move much lower than that. So it really has not done much at all today. Really just not impressed with gold's movement at all on the day right now. And let's see, I'm just checking it out and seeing it had a weird settlement price too. So a lot of odd stuff going on in gold right now. But we're going to see where it goes. I mean, after that massive drop it had yesterday. And looking on over and checking out copper. Let's check out the copper markets. Copper went on up to 3.622. And we had an expectation that copper would move up about 3.625. So literally we're talking about, no movement. I mean, perfect. So one deviation move, you tighten the stop, okay? Next bar, starting to move down, tighten that stop, boom, hits it, you're out, and you caught the move. I mean, that's a perfect, Apex, APEX setup right there. And you would have had a great trade, and it helps you manage your profit. And on Nadex, on anything, Nadex helps you manage your risk, which I love, okay? And even if you're not trading Nadex, but if you're trading Nadex, it helps you manage your risk. But after that, you got to learn to manage your profit. Sometimes you get so stuck on managing risk that you never get good at managing profit. And so that's why I like the deviation levels. They let me know where to manage my profit, where to take my profits. Whether I'm trading futures or Forex or Nadex, I'm using these deviation levels. Then hopping on over, what else we got? We got some corn, which has been pretty quiet on the day. Nothing spectacular to write home about. It went on down to a low of 756.25. We thought I'd get down to 757.9, and then down to 756.9, and then down to 755.4. Well, it did hit the 756.9 level there. And so at this level, you'd be tightening your stop, and boom, knocked out. Now it's basically flat on the day. A little bit of time left there in corn. Hopping on over to our soybeans, okay? So on the soybean market, checking that out, even less impressive. Basically opened up, went on up to 1459.75. We thought soybeans would go to 1454.9, and then if it moved further, on up to 1458, and then a little bit further to 1463. Obviously, we didn't hit the 1463. We did hit the 1458.3. So when we did hit that right here in this bar, then we tighten our stop up. Boom, we get knocked out right there at a low of 1455.5. We're glad we got out because, well, we would have gave it all back. And got to manage that profit. That's one of the big pieces of the game. And then we'll look at one or two more here. We'll go on the currency pairs. We had the euro dollar moving on up to 1.3013, and we thought it'd move up to 1.3018. So, I mean, you're talking 5 ticks shy. You should have been tightening those stops when it gets that close. If you did, you're happy. If not, then you still tightened up at 1.2998. And so you would have had it tightened right here anyway. So either way, would have had a good trade on that. You actually got knocked out in the bar no matter what. But would have been a nice long euro dollar trade. I hope you all have a great day, a safe day, trade well, trade wise. I will see you tomorrow right here on the Diagnostic Trading Hour. Stay tuned for another great show.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.